The surprise monthly jobs gain has some economists rethinking their outlook for growth in the second half and the potential for an even faster rebound. Steve Liesman and the Liesmaniacs joins us now, which is, I think, a better name than the Muckrakers, which is what you've been going with for a while. But just think about that, Steve. Anyway, tell us about that number.
Yeah, Joe, that surprise number from Friday really echoing through the weekend all the way to today as you see the futures in a positive mood this morning. And what it's done is it's caused economists to think, you know what, maybe there's some upside to the disaster that had been forecast. They're still forecasting very negative numbers, but now they're starting to think about upside risk to their forecast. Take a look at what Goldman wrote over the weekend. Quote, "We expect growth data in the U.S. and Europe to turn more clearly positive in the coming weeks." One of the things that they did is they lowered their outlook for unemployment for the year end to 10%. So still a terrible number, but a better number than they had in the forecast. J.P. Morgan writing, the latest employment numbers reinforce the sense of upside risk to the second quarter. Now, I want to show you a little curtain raiser on the Fed survey we'll have for you tomorrow. But here are the GDP numbers. Now, what you don't see is you don't see an improvement from the April forecast, and that's because a lot has gone down from April when we last did these numbers. But take a look at the third quarter. First of all, I'll show you the second quarter. Had been a 24% average decline. Now it's 29. That's worse. But you can see them starting to dial in a better rebound in the third quarter, a 12% rebound quarter to quarter, and then 7% in the fourth quarter. On the jobs numbers, a lot of talk about where the miss came from, how it happened, and a lot of talk about the BLS statement that workers continue to be misallocated, the unemployment rate is higher. That has nothing to do with what the market is so excited about, which is the 2.5 million jobs gained in the payroll, the separate payroll survey. And a lot of guys going back and looking at their forecasts, men and women, of course, and saying, well, what did we get wrong? I thought the best quote came from, as often it does, from Ian Shepard from Pantheon. He says, "The single most surprising U.S. economic report ever published likely is explained very simply. We know a great deal about the numbers of people losing jobs, but not much about people finding jobs." And I think that's a pretty good way to think about it. We now have to think, you know what? Maybe those claims numbers are not pointing the way to what's happening in the jobs market, and we need to look for different ways to see, are people being hired? And I think one of the things that I figured out, Becky, is that when something goes from negative 50 to negative 30, for example, the spending data and some of the high-frequency data that we've been looking at, it means that people had to have been brought back. That if you're doing even less negative, it means that there's still some positives going on in the economy. And in this time of really extreme movements that we've never seen before, forecasting is really reflecting the uncertainty and the opaqueness of what's happening in the economy.